I hope everybody's doing well tonight. Thank you so much for watching another episode of Talk with Angelo live. I hope everyone can hear me and see me okay. We're doing this every Thursday, 7 p.m. Central live, Talk with Angelo. So really appreciate you guys watching the show tonight. And so we've been doing this now pretty much, I'd say we're for the last 3 months, and we've gotten a lot of good feedback from our Talk with Angelo live. We've educated a ton of people. I think everyone can hear me and see me okay. We've educated a lot of people. You know, we've shot over almost 750 videos, and we've helped probably about almost 80,000 people in the last 10 years with funding or with either some type of consultation or credit or lending or some type of discussion. So we've worked really hard to help a lot of people, and so that's what we do here. And so I've dedicated my life and my team to changing people's lives, to give them the funding that they need and deserve, whether that's an investor that needs working capital or buying a business or buying investment properties, or someone just trying to buy their home. That's what we do. So we specialize in a lot of different type of loan programs. So really appreciate all of you guys tuning in and watching the channel. And we're here for you. We're here to answer your questions. You have real estate questions, we have answers. We do all different types of loans all over the country. Hey Bobby, what's up, man? Hope you're doing good. Good to see you. Thank you so much for watching the channel, watching the show. We're here to make a difference in your life and get you the funding that you can get to help to take your life to the next level, because that's what it's all about, in my opinion, is taking your life to the next level. How do we help you to go from where you are now to where you want to go? And getting a loan is a very important part of that. I mean, capital, debt, is essential, whether you're just trying to buy your first home. And so, or if you're just trying to be an investor and you're trying to invest in real estate assets, so anyway, it's an important thing. So I appreciate all you guys watching the show. You can ask me any questions that you want. Hey Cherries, how are you doing? Good to see you. So you can ask me any questions you want. It's an open forum, so you feel free to reach out. Remember, every Thursday we do a free, hey Ray, good evening, hope you're doing well. Thank you. Hey Bobby, can we get a house tour? Yeah, I'll do a house tour. We can do that. How do I get a commercial office refinance out of hard money? Even when I got the notification. Okay. I'll answer the first question about getting your property out of hard money. Let me just write that down so I don't forget. I know we're probably going to get a lot of questions in here tonight. So, yes, Bob, we'll do a house tour soon. That's a good idea, actually. I like, when I was a kid, I used to watch MTV Cribs, and I always liked checking out everyone's crib in their house. That's one of the things I always used to like to do. I love beautiful things, and as probably most of you guys do too. So, but basically, here on this channel, you guys can ask me any questions, finance, credit. We do all different types of loans here. We're a legit, real company. I've been doing this for 20 years. You guys can look me up online. We do our best to serve. We're not perfect by any means, and we can't help everybody. We're not that lender, but we do try to help as many people as we can, to make a difference. And so we have all different types of programs. We do private loans, hard money loans, commercial loans, residential loans, construction loans, investment loans, a lot of different types of funding for people. So that's why we're here. So, and you guys, like I said, if you have questions, we're going to do our best to answer those questions. You can ask me anything that you want. Rehab loans. Yeah, we do rehab loans. We do a lot of investor type loans, for people that are trying to do, do you do working capital loans for? Yeah, we do working capital. There's SBA working capital. There's a lot of different types of working capital loans. So we do we do business loans. We do rehab loans that are fix and flip. You can get the money to purchase the property right? Let's say the property's in distress and then it needs rehab, then you'll get the funds for fixing up the home. So let's say you want to buy a property, it's worth 200,000 and you need 50,000 for rehab. You can get the money to purchase the property and the money to fix up the house all in one loan. It's a rehab investor fix and flip loan, and you can use that to invest in real estate. You can do that for single family, or you can do that for multifamily. And hey, Lakeisha, good evening. How are you doing? Good to see you. Yeah, so investor loans are good because if you pick the right location, the property has a lot of equity. You can do really well. A lot of investors, they make 20 or 30% on a flip if they're really, really good. Um, so, so basically, um, so yeah, we do those, and then on working capital loans, yeah, there's a few different types of working capital loans. There's SBA, like we talked about, where you can do an SBA loan, and you can get funds for your business. Hey, Dennis, good evening. How you doing, man? Good to see you. Thank you guys so much for tuning in tonight. So there's a lot of different types of funding. It just depends on what you're trying to do. On the refinance of a hard money loan, if you have a hard money loan and you're trying to get out of it, yes, you can definitely get out of it, but we got to see, what your credit looks like, what the financials look like, so we can get you out of the hard money loan. Okay, so I got to take a look at your file, and then I can advise you, because usually the people, they do a hard money loan because they're looking for bridge financing. Where usually either the credit's not right or the property's not right, so you have to fix one of those two things to be able to qualify for bank financing. And the banks are going to be looking at the financials pretty tight in order to get the loan done. So just keep that in mind, because they're going to be looking at, make sure you have the right financials for the last 2 years. You got good credit scores, you got good liquidity. So you have to make sure that you're ready for refinancing to get out of that hard money loan to go into a bank loan. Okay, so it just depends on where you're at and what's going on. So I hope that helps make sense. So, and if you guys, like I said, if you have any questions, let me know. Remember about opening my own casino. Oh, that's awesome. Yeah, I think that's a really cool thing. I think that it's funny. We have someone in our office that's going to Vegas next week, and he's a big gambler, and and I've always loved Vegas. Vegas is a great city, and I think that if you do it right, I think you can do really well. You can make a lot of money. I really admire Steve Wynn a lot. He's one of my heroes that I really look up to, from the business, from how to operate a business. I think he's great. I don't know him personally, but I think what he's done to Las Vegas is pretty amazing. So, and I think if it's done right, it can be phenomenal. So, obviously you got to be really smart, and you got to be able to persuade the right people and hire the right people to help you to build it. But I think it could be really good. Sheldon Adelson's another one that's done a great job in Vegas. So, and also, all over the country. I think he's got them all over the country now. So, but yeah. So, and remember, every Thursday, 7 p.m. we do a free giveaway. And you can always call or text our office to 832-431-6331. That's our direct number. You can call or text that number, 832-431-6331. Also, give us a big thumbs up on the YouTube. We need your support. Yes, you can hire me to be the manager. Yeah. So I would hire Robert De Niro from Casino to be your manager. Okay, I would hire Robert De Niro and Joe Pesci. So yeah. So you need to hire Robert De Niro and Joe Pesci to run it for you. So anyway, so any questions that you guys have, about any type of loans, remember we specialize in FHA, VA, USDA, non-QM loans. I did some interesting podcasts this week talking about Fannie Mae. I think that you're going to start to see the unwind of Fannie Mae. They're getting out of the market pretty heavily, from my opinion, on investment properties and loans sub 700 credit scores. And you're starting to see private investors, non-qualified mortgage lenders step in and take that market share that Fannie Mae used to take. No, last year and in the beginning, not the lake, it's not yours, it's God's. So last year, Fannie Mae had great interest rates for investment properties and for people below a 700 credit score. But we've seen a lot changing so far this year in 2021 is that Fannie Mae is kind of shifting away from that, and they're moving towards, primary residences, maybe some second homes with very, very high credit scores, lower LTVs. So you're starting to see the non-qualified mortgage, the private lenders kind of step in. So I wouldn't be surprised in the next 10 years if, private lenders, they kind of take over some of the market share from Fannie Mae, because I looked at a loan for an investor the other day, and he couldn't even get an investment property with 20% down through a Fannie Mae channel. He had to, go to a private loan. So you're starting to see that, right? So, all I'm trying to say is that, in some ways it's good, I would say, but also expect that more lenders are going to come out of the woodwork, and there's going to be more different types of funding opportunities, and not just, government type agencies. You're going to see more private lenders step into the market, to make these loans. And I do believe that, because I'm already seeing it right now. So have you heard any insider information about Biden moving? Yes. Well, actually I did want to talk about, I did a podcast. No, USDA doesn't like charge-offs. USDA will probably make you pay off those charge-offs. That's a good question. So I did do a podcast earlier this week, and one of the people on the show a few weeks ago asked me to make it, talking about Biden and the government agency with respect to student loans. So I have a podcast coming out. I think it's going to come out maybe next week after the 4th of July. And basically, one of the things I talk about in there is, so right now for FHA loans, if you have student loan debt, let's say that you have $100,000 in student loan debt, the FHA takes 1% of the balance to qualify you for your student loan debt. Now you might not even be making the payment. You might be in a deferral, right? But they're going to take this 1% multiplier. You might be in an income-based payment plan. You might be in some type of deferment, but it doesn't matter. They're doing 1% of the balance. So let's say it's $100,000 in debt. Multiply that by 100,000. That's $1,000 a month that goes into your debt ratio. Now, with that can affect your qualification, whether you're trying to do a purchase or a refinance. So if you're trying to do a purchase, for example, and now you have this student loan debt that's been factored into your debt ratio, it could totally kill it, right? So, and this is affected, believe me, this has been in place since Obama. So this has been in place for, 12 years, right? So the thing is that, so think about the millions of people that have been denied for a loan. Millions of people. Because you have all kinds of people that go to school. I've seen doctors have $500,000 of student loan debt, and they can't get a loan, right? And even conventional lending, they'll take your deferment, conventional lending, or they'll accept your income-based payment, but FHA will not accept that, right? So the issue is millions of people haven't been able to qualify for a loan because of this. So what Biden's basically talking about is, hey, you know what? Forget all that. We need to be mirroring, the conventional loans. Okay. So, hey, Kenneth, what's up, buddy? Good to see you, man. So, Biden said, hey, look, if conventional is doing it, why don't we let FHA do that too? It makes a lot of sense, right? So, for example, if you have $100,000 of student loan debt, but you're in an income-based payment plan with a conventional and your payment is $20 a month, that's all we're going to hit you with for your qualification for your debt ratio is $20 a month. Why would it be $1,000 a month? I'll never have to make that payment in my lifetime. My minimum payment, it says, is $20 a month. That's what should be used for the basis of the qualification for a home loan, right? So this is all supposed to go down this year. I don't know when it's going to go into effect. I don't know all the details. Once I know all the details, I'll let everybody know. I just know that this is new information that's coming out, and it's a big change because, a lot of people that were denied for FHA loans are going to have the opportunity and the potential to be able to get, no, if you already got your pre-approval, Lakeisha, we can update it for you. Don't worry. Yes, if you already have a pre-approval from us or from another lender, they should be able to update that for you. So you don't miss out or you don't lose anything. Time frame to become a mortgage underwriter. Mortgage underwriter, it depends on the type of underwriter, Kenneth, that you want to become. I would say the very basic, 3 to 5 years to be, an underwriter at the very earliest. So they're paid off, but still fighting to get removed off credit. If they're paid off, you're okay for a USDA. As long as they're not open charge-offs or open collections, you can still get a USDA loan. All right, you have to get a letter probably showing that they're paid. Which ones are easy to qualify for? Depends. They're all different types of loans. I mean, no loan is really per se just easy, right? I mean, there's requirements, there's qualifications. Hard money loans are great because they have less credit requirements, but you have to have a lot of money, or a lot of assets, or a lot of equity. Conventional loans are probably going to be more strict. Yes, USDA is more strict. FHA is more lenient. So it just depends on what you're trying to do. Lenient doesn't mean better. It just depends on the person's situation, right? And Angelo, the mortgage underwriter I'm talking about is commercial underwriter. Man, I would say at least 3 years, bud. Minimum 3 years. I'm a big advocate of being a student and learning and mastering your craft. So longer the better. I was talking about this with my coworkers in my office, my team, and they're, some of them are new, some of them are newer, some of them have been there for decades. And, a lot of the times the senior people have the expectation for new people that they're just going to hurry up and learn the job. Okay. And it doesn't work like that. It takes people a long time to learn things. I was talking about my son's a baseball player, and, he's been playing baseball for about almost 8 years. And we're still working on a swing, trying to get a swing down. And we invest a lot of time and money and energy on this swing. Commercial properties. Okay. Yeah. You want to, okay, like Hong Kong. I mean, you're probably going to have to be doing that for practicing for at least 5 years, Kenneth. Because if you're talking about commercial assets like in Hong Kong that are worth, millions of dollars, that those are tough deals. And meaning that there are a lot of skill, a lot of things that you're going to, and what is this? Are we going to go to FICO score 10? I don't think it's coming. FICO score 10 is coming out this year. Yes, patience is the key. You got to, you have to make sure you understand what you're doing, and that that you've learned it and you can master it if you want to be the best. That's one thing, that mastery is critical. I'm not a big fan of, jumping around and doing a bunch of stuff and not really being good at anything. I'd rather you learn and become the master of one thing. You're going to make a lot more money, in my opinion, and be great at something if you can just develop mastery. Whatever that is, commercial underwriting, gambling, lending, pharmaceuticals, just, landscaping, whatever, just be really, really good at it. I heard that the FICO score is really tough. It depends, Don. Most lenders are using a blend between FICO score 2, 5, and 8. So I haven't heard about FICO 10 coming out this year. I heard FICO 10 could be coming out next year. So, that's a good question. I need to do a podcast on that. That's actually a really good topic. I need to be doing a podcast on that topic. What credit score to trust? What credit scoring module is it? 2, 5, 10? I'll do a podcast, all that. So anyway, yeah. So I think that it just depends on what you're trying to do, and oh yeah, you're in Vegas. That's right. I forgot, Bobby. Yeah, you're in Vegas. Yeah. So yeah, if we'll call you when we come up there, man, we might be up there this year. So we normally go up there once a year as an office. Hey Kevin, good evening. Hope you're doing good, man. Thank you so much for checking out the show and the channel. Yeah. So anyway, the big thing, the big update with FHA and Biden, the student loan debt. I think that's a huge thing. We talked about the Fannie Mae wind down. I think you're going to see a lot more lenders come out in the market, and you're going to see somewhat of an evaporation of government lending. You're going to see more private lenders come out. I think it's great, and it's a good thing. It's not a bad thing. It's nothing to be scared about. is just something to be mindful of. I think you're going to see interest rates go back up. I think you're going to see mortgage rates go higher. I did see that the cost of lumber has come down a little bit. So hopefully people that are looking to buy a new home, obviously it's not going to affect you right now, but a lot of these builders, when they buy lumber, they bid out to the future, the futures market, to lock in those lumber rates. And some of those lumber rates have pulled back, which is encouraging. If some of the other commodities can pull back too, then that could help to reduce the cost of housing, the house prices, so that way more people can go out there and buy a home. So I'm sorry, Terry, I missed that question. I'm sorry, if you could repost that. I was talking about something. So yeah, if the cost of lumber has gotten cheaper, maybe more builders will build more homes that are more affordable, because I'll tell you that the last 3 months has been nightmare. It's been torture for people trying to buy a house in new construction, because the price has skyrocketed. It's literally just gone through the roof, right? So I'm thinking that the next, hopefully prices get better. How does underwriting work? Underwriting is basically, it's like a forensic analyst, right? Like at a lab, they are basically the risk manager for the lender. They are very methodical, very slow, very, thinker type people. And they're essentially assessing the risk of the loan, going through, auditing your file, auditing your loan, and making sure that everything's compliant to meet the requirements for the loan, okay? So they check little things like, what did you deposit in your bank statement? Why did you, have this on your pay stub? Why is this on your credit report? They're asking all these questions, right? And that's just their job to do. So, and you have to, when you're getting a loan, your loan has to go through that process, right? Your loan has to go through that process, and they're going to ask you a lot of questions. How much, for example, if you pay rent, how much is your rent and how do you pay that rent? Is it by cash, check, money order? They're very strict on certain things. Like they won't accept, for example, well, I pay my landlord in Venmo, or I pay my landlord in Cash App. That might not be acceptable to an underwriter, okay? So they check certain things to make sure the loan meets the requirements for the lender. And they have a very important job. So yeah, they act like your mom, but they check a lot of stuff. And so the way it works is, even if you own a mortgage company, the mortgage company, the senior management cannot induce or influence the underwriter to make their decision. So they're on their free will and have a separate and independent license to make credit decisions. And it's a really important thing. So one-time close loans. Yeah, I mean, 203K and one-time close, those used to be really hot prior to COVID. During the COVID times now, those loans have been frozen, but they were hoping that they come back soon. Hopefully they come back, maybe later this year, maybe next year, I don't know. So I'm hoping that they come back. They're currently on dormant. They've been suspended, those type of rehab loans. Hopefully they come back later in the future, I don't know. But yeah, before they were hot products, but currently they've been kind of on the ice because of everything that's happened, with the economy, with COVID. So, and I know I missed some of you guys' questions. I'm sorry if I did. Just repost it, and I'll respond to it as soon as possible. Kenneth, what's the difference between underwriting mortgages of the primary mortgage market? Yeah, so I mean, Kenneth, that's a great question. Underwriting the mortgage in the primary, that's the origination market, like the market that I'm in, and that's where you're making the loan to the borrower to repay the loan. And it's a different underwrite than underwriting for the secondary market, where that's the underwriting of purchasing the tranches of the loans from the lender, from the originator, right? So they're underwriting a completely different type of package than the primary origination market. They're underwriting the risk of the tranche of the loans. They're also underwriting the quality of the underwriting that our underwriter did on the primary loan. Okay, that's a great question, Kenneth. There is a huge difference between underwriting loans on the secondary market and underwriting loans on the prime. They're also making sure the underwriting on the secondary market that loan meets all the requirements for the investor. They do a huge scrub of that file to go through it to make sure everything's in there is legit. So it's a different type of underwriting, but that's a very good question though. So yeah, and if you guys have any other questions, let me know. The one thing that I want to go back to on the FHA with the student loans is what they're going to be changing. Just the takeaway or the recap is that they're going to be basically mirroring conventional loans, honoring the income-based repayment. Okay, so that's a huge thing because again, if you're on an income-based repayment, you can technically qualify for more house, and that's the big thing with the FHA. Is it's supposed to be fair lending. It's a federal program to help people, to help families. So I really applaud Biden for adopting that, and I think it's a great idea. And I think it's going to help millions of people to get funding that have student loan debt. I went to college. I had student loan debt. I didn't have a lot of student loan debt. It's paid off now, thank God. But a lot of people, they have a lot of student loan debt and they weren't able to get a home loan. So I think that's it's very positive and very, very encouraging. What else is a big thing right now in the market? We talked about interest rates. I think the interest rates are going to be rising. Maybe not this year. Maybe next year. I think interest rates will go back up. Hopefully, home prices come back down. I think that's going to be an important thing. We have if you guys, you obviously you probably already know about me. We have hundreds of people that we have that call us every single day. Hey Terry, I'm buyer's market slowed down. I'm hearing different stories. Are a high overbidding still going on? Oh. Hi, Terry. Good evening. Yes. Right now, it has slowed down a little bit, Terry. I would say as we get closer to the fall or winter, it's going to slow down even more. Generally speaking, with real estate, as you move closer to the winter, the real estate market cools off. Okay. And I would suspect that to somewhat happen. Right, I would think that sometime later this year that's going to slow down, and there'll be more houses. There'll be the foreclosures will hit the market. There'll be more inventory on the market, more opportunities for you guys to be able to purchase homes. So I think that would happen. Sometime maybe August, October, November timeframe, and you might be able to save 5 or 10% on your house. I don't know for sure. I'm not a magician or I don't have a crystal ball, but generally speaking, things cool off in the fall and the winter. Okay. So, it may not be a bad time, to wait and see what happens. I don't think it's going to get hotter during that time. I could be wrong though. I don't know. I don't know everything about that. So I'm not 100% sure. But I think it's a good question and a good thing to think about because sometimes, if you're in a hurry to buy a house, you might overpay for that house because, the market was too overheated. There's too many bidders, and then you overpay for the property, and that's not a good thing. The best time could be December or January. Could be. The only thing you got to think about is if you're buying in December and January. Now that seller might not be selling their home in December or January because they know it's slower. Generally, more sellers will be on the market from March, okay, until July. So basically, you have less fish in the sea in December and January because the sellers are not stupid either. They're not dumb, and they have brokers that advise them. So they're not going to go put their house on the market in December. Why would they do that? Okay, they're just going to wait until March when it's summertime or the spring comes. And it warms up a little bit, right? So that way, they have a better chance for buyers to come out and look at them, especially if you're on the north. If you're in the north or the northeast, yeah, they're not listing their home in December, I promise you. They're waiting until the spring or summer to list their house. And so that's the other thing too. You're gonna be looking at less properties too. So there's gonna be less to choose from, but they'll probably be more inclined to deal with you too. So I mean, you just have to look and see. I just know that from being in the game for so long, how it works. So it is what it is. But it's a good question though. What else? What else did we talk about? Oh, one thing I did want to talk about is we were talking about interest rates, and I did a podcast on this, and I think it's important for you guys to know too. When you're getting a mortgage loan, the difference between locking your interest rate and floating your interest rate. So there's a huge difference in locking your loan and floating your loan. Okay, so it makes a big difference when you're getting a loan, because when you first apply for a loan, your interest rate's just floated. So let's say that your lender quoted you a 3% rate. That doesn't mean that rate's locked. Interest rates, they change daily. They're like commodity, like gas prices. They change just like lumber, just like oil prices. So you have to get with your lender to ask him to lock the interest rate on your loan. All right, and that could be based on the market of that day, what the interest rate is. So based on whatever the rate is for that day, will determine, hey, what's up, Charles? Good evening, good to see you. So based on whatever the interest rate is for that day is the rate that you could get. Now you can buy down the interest rate, you can pay points. 1 point will usually lower the interest rate by maybe a 1/4 point to a 1/2 point. So, and we've done a whole bunch of videos on points, and you can see those videos. Basically you can go to and get a higher interest rate. If you get a higher interest rate, that can help to pay towards your closing costs. It's called a lender credit. So you can get a par rate. So there's a lot. Floating's like dating your women. Yeah, that's a good analogy, Bobby. Good one. So the big thing, the takeaway is when you get your loan, doesn't matter what type of loan you're getting, whether it's a mortgage for a house, a commercial loan, a construction loan, talk to your lender about, hey, you want to participate in locking the interest rate. You want to know when you lock the rate, and you'd like to choose what rate you want. You might want to be able to buy down that interest rate. He may offer you 3, say, look, can I pay points to get a 2% rate? Can I buy a lower interest rate? Ask your lender that. He might be surprised. Hey, where did you get this information? How did you know this? Hey man, I saw this on Angelo Christian. He taught me about interest rates, and I want to be able to participate and lock my own interest rate so I can get a better deal. Because, maybe you didn't know that. You can actually pay points to buy down your rate on your house, on your loan. It doesn't matter what type of loan it is, commercial, residential, whatever. You can actually buy down that rate, which is really cool. Okay? So just something to think about, because, it'll save you a lot of money. If you go from a 3% to 2%, it could save points. Terry, they're a percentage of the loan amount. So if you have a $200,000 loan, 1% is $2,000. So the percentage of the loan amount. So if you have 1 point, you multiply that times the loan amount. The point is 1% of the loan. That's right. So 1 point of 200,000 is $2,000. 1 point of 500,000 is $5,000. And generally, that 1 point that you pay will lower the interest rate. Not all the time, but let's just use 0.5% on your interest. So if the lender was giving you a 3% rate, you could pay 1 point, and then your interest would go from 3% to 2.5%, right? No, buy down can be for any program. So a buy down can be for any type of program. It can be for FHA, VA, USDA, conventional, jumbo, hard money loans, all kinds of loans, commercial, construction loans, all of them. All of them use buy down. You can pay points to buy down the interest rate. Now, the lenders may not want to tell you that, and they may not agree to it, but it's possible. Okay, it is possible to do. So that's the big thing I want you to be aware of. And you can talk to your lender about that next time you talk to them. Say, look, maybe I want to buy them. You don't have to buy down. I'm not saying you have to buy down your interest rate. I'm saying you can. And if you do, that's how it works. It'll actually lower the rate on your property, on your interest. So it's a great topic. And so, we have a lot of videos on that. So again, I appreciate all you guys always supporting us, watching the show, watching the channel. We work very, very hard to educate people, to empower them, teach them about mortgages, teach them about finance and credit. Right now, so right now, all the grants, because of how hot the housing market is, the housing markets, the sellers market is so hot, a lot of the grants have gone away. Sellers aren't accepting them because, they're getting cash offers. Think about it, if you're selling a house and you got 20 offers, are you going to do anything with a grant? No, you're not going to mess with that and do an extra 40 pages of paperwork when someone's offering you. You got 10 people offering you cash. So all about grants and all that stuff has been kind of set by the wayside. I'm not saying that we can't get it, or we can try to get closing cost assistance, but the market is lenders are limited on points because they're limited overall. That's right. There is a limit. That's a good point. That you can't do unlimited points. That's a true statement. Generally, your limit is 2 to 3 points. Now it depends on the loan. Some loans are different than that. But yeah, most loans have a limit. That's right. So it depends. It's all subjective to the lender, the program. Generally, 1% point will buy the interest by 0.5%, maybe 0.25%. It just depends. There's so many different types of, so it just depends. This is true. Can we get a grant and this still pay for a down payment to make it more? Normally you could get a grant and still pay for your down payment to get more assistance. But again, we're in the market that we're in. It's very hard to get any type of assistance right now. Okay. Now, if things cool off, like prior to COVID, prior to COVID, 2019, yeah, there was all kinds of grants, down payment assistance, closing cost assistance, 6%, 3.5%, no problem. Now it's different because I don't know what part of the country that you're in, but you're seeing that, again, you're selling your house. Let's say you're in Orange County, California for $1 million, and 19 people have made an offer to you. And you have to just think about this if you're the seller. So the grant programs, they require the seller to contribute up to 3% for closing costs. He's got to fill out a bunch of paperwork if there's any type of down payment assistance. The lender has to go through a lot more work. The realtor has to go through a lot more work. Then they're not going to do that if you're in a multiple offer situation. Well, you have to look at it from their side too, because if you're selling a house and then, hey man, I'll give you cash or close in a week, then why would they go through all this stuff to do a grant for you? Now, the only time I've seen right now where they're accepting any type of grants, that's right. Let's check on the Section 32. There are checks on Section 32. That's right. That's a good point. Certain loans have. There is checks and balances on Section 32. That's a good point. There are certain grants that maybe might work for certain types of properties, but usually I will tell you that those grants are for properties that are in distressed areas, maybe an area you really don't want to live in. Okay, there are grants still out there for those, but maybe the property is not desirable. Okay, so that's the thing you have to be mindful of. Is now I don't think it's going to be like that forever. I think once the market kind of takes a breather, things kind of settle down, there's more inventory out there, buyers have more options, then you might be able to get some down payment assistance. Well, the nurses, I think you're talking about either Homes for Heroes or Frontline Heroes. They still have that. That's not a grant for like down payment. It will reduce your closing costs. You can get I think it's like a $1,500 credit. Those are still out there, but it's not going to be like 10 grand. Maybe $1,500, $2,000 max. It still helps. Every little bit helps. Frontline Heroes, Homes for Heroes, Frontline Workers, $1,500, $2,000. Those are still out there. And we actually have some of those programs. So, oh, you're welcome, Angel. I appreciate you. It seems like you know a lot about lending law, so that's good. So, yeah. I mean, anyway, and we have a lot of yeah. Hopefully, they do come out with it. Now here's the thing, Charles. Now, it's one thing to talk about it, and there's all kinds of grants in Congress, but it's another thing to actually get it. I knew a guy one time, he took 6 years to try and get a grant for his oil and gas company, never got it. And he must have spent 1,000 hours of his personal time trying to get this grant. And every time I saw him, he'd always tell me about he had to change this, do that. Anyway, he never got the money. And I know there's stories of people that do get the money. There's stories of people that do get the money. So I'm just saying that, grants are good. They're not bad. I'm not saying they're not bad, but I mean, I wouldn't rest your laurels on getting a grant, is what I'm trying to tell you. Have another option, because you might not get that grant. You might not get it. And if that's the basis of you getting a house, I don't think it's a good plan. I think you better have another option lined up just in case. You better do a side hustle or figure out how to make extra money or do something else. Because, that grant may never come through. The government could be out of money. I don't know what's going to happen, but, so just have other options. Go and try and get the grant. Try to get it. I think it's great. Try to get grants. Get them as much as you can. But if they tell you, look, we're out of money. I've seen where the USDA, for example, runs out of money, and people are in the process of closing on their house. I've seen that, believe it or not. So you need to have another option just in case something like that comes up, is all I'm trying to say. Nothing wrong with getting a grant. I think it's a good idea. So anyway, we talked about a lot of good stuff tonight. Remember, we do on our show YouTube channel, we have four videos that we release every week: Monday, Wednesday, Friday, Saturday. You're willing to fly me out to Phoenix, Kenneth, to meet with me? I was in Phoenix. I was actually in, it's funny you bring up Arizona. I was there, where was I at? Not Phoenix. What's the city right outside of Phoenix, where all the rich people, and I wasn't there for, what's the one ticket to, from and back? What's that city? Scottsdale. I was in Scottsdale 2 years ago, before COVID. And I went to a resort for a business meeting. Well, I land on other planets. Maybe if Elon Musk and I partner, and then I'll land on other planets. But only if Elon Musk and I partner up, and then I'll land on other planets. So that's a good idea. We can make a loan to people in Mars. So that would actually be really good. Yeah. Elon Musk has to call me first. But I don't think he'll call me. I'm too low on the totem pole for Elon Musk. I'm pretty sure. So, but yeah. Anyway, I was in Scottsdale and really enjoyed it. I really love Scottsdale, Arizona. The weather was great. Beautiful area. Got to meet a lot of nice people, a lot of business. It was a business event I went to 2 years ago. Met a lot of great people, a lot of great networking. Hopefully comes back, guys. Networking is a huge thing. I encourage you guys to get out there and network as much as you can. Networking is a very powerful thing. You meet new people, new opportunities. I always say that, and you've heard that before. Your network is your net worth. You got to be meeting people, man. You got to go out there. You got to put yourself out there and meet people. To make deals, do things, be interesting, meet interesting people, make business. That's a huge thing with life, right? You have to be able to do that. So anyway, again, I appreciate you guys all watching the show. I want to move to our Amazon giveaway. We do that free $100 Amazon giveaway every Thursday, 7 p.m. Central. And we're here for you. You can call or text my office, 832-431-6331. I want to be here to help you guys to take your life to the next level, whatever we got to do to make that happen. So I'm going to go into and ask you guys the test question or bonus giveaway, whatever, lightning round, whatever you want to call it, to hook you guys up, get you the money. So the big thing that we talked about tonight was one of the big things, the big takeaways. We talked about a lot of big stuff, but the big one that I want to talk about is the FHA and student loans. So what was the big change that we talked about tonight with the FHA and student loans? What's the big change that's getting ready to come out with FHA and student loans? So whoever answers that first correctly is going to get the $100 Amazon gift card. And then text me your email address. You can text me to 832-431-6331. What's the big change that's coming out? No, answer it. You got to answer. What's the big change coming out with FHA? So far, I haven't seen the right answer. So there was a big change that we talked about with student loans expected by FHAs. So someone has to answer the right answer, and then that way I can give away the money. Who wants free money? Somebody wants free money tonight, a free $100 gift card. $100 can go by real quick in Vegas, can't it, Bobby? So what's the big change with student loans that's going to be changing? We talked about. Who remembers? So there's a big change that we talked about tonight. What's going to happen with the student loans? What's going to be changing with them? The repayment percentage, that's right. But what's going to be what's going to happen? Okay, yeah, I'll take you up on that, Kenneth. Send me a ticket. Send me a ticket. I'll come see you, buddy. No, it's not going to be 1% anymore. So it's changing. Income driven. Valerie got it. All right, Valerie. All right, girl. Valerie, income driven repayment plan for FHA. Text me your email address, 832-431-633. Thank you, Valerie. No, it's not 2%. You don't want 2%. No 2%. You don't want that. Yes, Valerie. Good job, Valerie. That's right. You got it, girl. Congratulations. So text me your email address. We'll hook you up. I appreciate you guys watching the show on the channel tonight. Remember, we got a ton of great content on our YouTube. We're here for you to educate you, empower. We love you guys. Take care. Be strong. Be safe out there. Make the most of your time. Make the most of yourself. We'll see you guys next Thursday, 7 p.m. Central.